Hi, Peter Rose, Longwood Currency Trading, and this is the sad story of trading with the it'll come back method of trading Forex. It's also titled How to Lose the Most Amount of Money in the Shortest Possible Time. It's the ultimate combination of the salad buffet ingredients of fear, greed, and hope. And it's so much fun that's why we keep doing it. But before we get into that, it's really windy out. I mean, there's 25-mile-an-hour winds going here. It's January, ended in January of 2021. And temperature is down probably below zero with the wind chill. So we've got to go make a fire in the fireplace. So that's the task we've got now. And then we can chat a little bit about trading in the it'll come back method. So stay tuned. All right, we've got some starter pieces, and we'll get this puppy going. That's probably what we'll do. All right, little paper, just because we can. Get some initial killing in here, and we're going to be set to roll on this. Go. All right, let's get this thing going. Sue is out walking the bow dog right now in the woods. She's not happy about that. But when she gets back, we'll have a fire going, hopefully. All right, let's rip it up. Yeah, I just love a wood stove. It's, yeah, they are messy, I guess, but, you know, they're efficient if you know how to run them, and I really enjoy the fire. Anyway, that's my speech on the wood stove for today. So I need another cup of coffee. I got to watch this just for a couple of minutes here, because I got to put a real big log on there once it gets fired up, and then we'll start this whole thing off. Okay, good. So I used to be a real neat freak. I, generally lived in more contemporary, or not contemporary, but yeah, contemporary areas. And then when I moved into my last place, a condo in Dover, New Hampshire, I decorated that as sort of an Italian Tuscan theme. Still very neat, clean, and all that sort of stuff. But since we bought this 1775 antique cape in 2017, January 2017, I mean, it's old and it has all that character, and so having a wood stove and having some dust around and having wood in there and all that sort of stuff is sort of the ambiance of this period piece. And when we redecorated it, I didn't want to have a suburban version of an antique cape, a really historic, classic home. I wanted it to be comfortable and something that was, there was a sense of history and time in it, and so we took pains not to make it look like a suburban reproduction. And I really value the wood chips and crap flying around in the wood stove and all that stuff. So trading in the it'll come back method. You know what that means. You know what that means, because if you've done any trading at all, and not in a sim account, because that doesn't count, you've sat there and you've set your stops or whatever, and you moved the stop, or maybe you got into the trade and you had a big stop on it, and for some reason changed your mind and took the stop off because you thought that conditions would change and you didn't want to take quite such a big loss because you had done so well on the previous trades and didn't want to give any of that back, and figured that the price would, listen for it, price would come back. But it didn't. And it won't. In one of my last videos, I talked about how to manage a losing trade and discussed that you could add to your position if you hadn't gone all in at the start. As price, let's say you were long, you were doing a short position, and the thing went long against you, and so as the thing started to come back down, you'd have to reevaluate that position there. If I was just coming up to the screen at this point, would that particular movement or that structure or whatever all that is, would that warrant going short at that particular time? And of course, you'd have to do multiple time frame analysis and look up and find out what the long period moving average is, whether you're using a 55 or 200 or whatever the hell it is, that you make up your mind up on the 1 hour of the daily chart to determine what you're going to have to do on the shorter time frames in order to be in sync with where the longer term is. Some of these reactionary moves can be 300 pips, a counter to the major trend, which might be a weekly trend. It might have to be up on a week. And so when you're taking a trade, it's always been my position that you put a short stop on there, and if the thing goes against you, just get out. Because if it turns around and proves you're right, you could always get back in. Yeah, you did take the hit, but if it's a small hit, you can take that small hit 2 times or maybe even 3 times before you say, wow, this is just a stupid idea. I was just totally wrong. Whereas you might have just got caught in a quick swing against your position, and it takes you out, and then it'll come back, and then you can get back in the trade. But what happens if it doesn't come back? What happens if your stop is out 30 or 40 pips? You know, what you call your panic stop. Now, you can hard set that, or you can just kind of mentally set it by drawing a line on your chart and saying, hey, you know, if price gets up here, I'm going to get out. Well, you won't get out. And you probably won't get out as a beginner or even as an advanced intermediate, even with your stop up there, because you'll be trading up on the higher time frames then, looking at that, confirming that the price is going to turn around. And dimes to donuts, that panic stop that you set was set at a structural point. So you say, oh, well, look, I set that structural the hard stop, the long stop, whatever you want to call it. I call it a panic stop. I set that based on the lower time frames that I'm trading on, whether that's an hour or 15 minute or whatever. That stop could be 30, 40 pips. And so now you rely more on your higher time frames to tell you, well, what's the real trend here? Oh, the real trend is down, as I had thought that it would be, and I was trading down. And so 30 or 40 pips is not enough breathing room. If I was trading on the 4-hour chart, or if I was trading on the daily chart, 30 or 40 pips would not be enough to warrant having a stop, because normal retracement of the price would go to that point. So I'm going to move that stop out to where the structure on the 4-hour or the daily chart would be. Now you could be 100, 200 pips out. And so, I mean, look, trading a 3 lot at 30 bucks a pip is, I mean, 100 pips, that's 3,000 bucks. That's just too much. If you're trading, if you're trading 3 lots, and you take $1,000 off each lot for that $3,000 loss, and your margin is $700, you've only got $3,000 of runway per lot. So you're losing a third of your runway. So what are you going to do? How many times are you going to be able to do that before you get hit? But see, that just says it'll come back. It's got to come back. I'm going to move the stop up a little higher. And the price just keeps going up, and it keeps going up, and it keeps going up, and that $30,000 that you have involved in that particular trade at that time, you're $3,000, you're $4,000, you're $5,000 behind, and you just go, fuck it. It'll come back, and I just have to wait for it. Well, I mean, I've done that before in trading, and I'll do it again. And I suppose when you take a 10 or 20 or 25% hit against your bank, that's not all that dramatic if you've had a chance to build that account up. Let's say you're trading a $30,000 account, but you've got $60,000 or $70,000 or $80,000 in the account, but you're only trading $30,000 of that. So, okay, so you lose $6,000. You've lost 20% of your bank, of your 30,000, but of your 80,000 or 70,000, it's 10% of your overall funds available. And so you can play games with yourself that you want, but you better be sure that you're a damn good trader in order to come back from that. But you take the case of the beginning traders, of the intermediate traders. And what happens if you hit that right off the top? What if all you have is $30,000? I mean, what are you going to trade? You're going to trade with 5,000 of that? You're going to trade 5 minis? No, you've got 30,000. You've obviously worked your way up through the hazards of just learning how to trade, and you've decided that you have the skills to commit $30,000. Maybe you've been very successful with that $1,000 or that $5,000 mini account that you've been trading, and you feel very comfortable that you could put at risk a $30,000 account. And so you go in there, and then you get into one of these fucking it'll come back routines, and you lose $6,000 of that 30. Just an enormous hit against your bank. Is it worth that risk? You know, 90% of the traders lose 90% of their money in 90 days. It's insanity. And if you hit the proverbial 6 losses in a row right up front during this stuff, and then you combine that with letting one of these trades go, it's catastrophic to your account. Even if you're starting at the beginning and you don't have a lot of runway behind you, you trade with a $30,000 account, you've traded with that for, I don't know, 8 or 10 months, and you're at $45,000 now. But you're still trading that $30,000 balance, and all of a sudden you take a $6,000 or $8,000 hit against that. Man, how do you come back from that? You don't. You just don't, because the price doesn't come back. And when it does come back, that just emboldens you to think that you can trade your way out of that successfully. But again, when you get hit with it, when you finally get hit with the thing, it could take out 6 months of your trading profits in one bad trade. So you really have to look not only analytically at this it'll come back thing, but you've got to look at it emotionally. Read Trading in the Zone, Mark Douglas's book, and because he talks an awful lot about that. You have to be able to not only understand what to do, but you need to understand what kind of context your emotional, your personality structure plays a part in all of this trading. It'll come back is an emotional decision. Setting a hard stop that takes you out when it goes against you takes the emotion out of it. And that's the whole key, I think, to trading. I've long said that if and when I work with someone, that if all you did was set a hard stop, a short one, and you did whatever system it is that you're trading, you'd at least be jump ball trader. You'd at least break. You wouldn't lose, unless your win to loss ratio is just miserable. Again, if you're winning, if you're losing 3 out of 5, okay, even that 8-point hard stop that I've got as a day trader, you lose 3 of those, you're out 24 points, and you make 13 or something on the other two trades. You're just barely scratching there. So, and that's on the trades. That isn't on the statistical likelihood that you're going to fail 3 or 4 times in a row anyway, right? So you have to be very, very, very cognizant of this it'll come back thing. Don't ever get yourself in a situation where you say to yourself, it'll come back. Because it's not based on fact. There's no fact in that. You can do what I've done and what everybody else does, all of a sudden jump up to a higher time frame and say, oh, look at this. This stop that I set here is, that was just put on the lower time frames, and look at the structure that this higher time frame affords me. I can move that stop right on up. Man, I've got into a lot of trouble with that. I've lost a lot of money with that. Now, when I had my original first large account that I wiped out in, I had those statistical 6 losses up front, so I was way down, and I was trading over leverage, and I continued to trade over leverage, and I hit one of these, oh, it'll come back things. And it wasn't just being clinical about the situation. It was that fear of missing out. That, oh, look, I've lost the $40,000 that I had at that particular time, and had lost $18,000 of that. I'd say, oh, I got to make some of that back. So there's the fear of missing out coupled with the it'll come back shit, and man, that just gets you in a world of trouble. And you can avoid the whole thing if you set a short stop. And people complain or criticize me, oh, you're a short stop, you're going to get that hit all the time. Well, I'm not going to get a hit all the time because my win-loss ratio is good. When you're experienced, you learn to look at your trade entry. What are you doing? Just taking jump ball trades? Oh, that looks pretty good. I'll go in. You can't do that. You have to do your analysis and get your trade entry right. If you get your trade entry right and you're pushing 65%, I mean, if you're getting into it, you better be over 60% anyway, just before you're even thinking about trading any serious money on a win-loss ratio. And I'm fortunate, I'm up around 70%. And that's taking into consideration some of these miserable losses that I have when I do stupid shit. I got a little bridge troll that sits here on my shoulder called Ed, and he whispers in my ear to do stupid shit. And when I listen to that, I don't know what to do. Well, you can shut Ed down by simply putting that short stop in there. The price comes down and hits it, you get taken out. You lose 8 pips or whatever you want to make it, 10 pips, 20 pips, or whatever it is. And you get taken out. If it turns around and goes in your favor, you get back in the trade. You can do that 2 or 3 times before your cumulative loss is the 2 or 3% against your account that you're limiting yourself to. They say, well, when you lose 2%, you get out of the trade. Set your stops at 2%. So by taking the short trade, you can take 2 or 3 runs at it before you hit that 2% level. You're in the same boat that the person who sets a 20 or 30 pip stop is in when the 30 pip stop gets hit. Except when that 30 pip stop gets hit, when are you going to get back in to make the 30 pips up? I'm right here. I've lost 2 times in a row, 8 pips. I've lost 16 pips. And the thing turns around and it starts to go in my direction, and it goes 20 pips with my full
with my full position on. I'm way ahead of the game. So, you know, the thing here is all about it'll come back. But the whole point of the whole point of the video is you don't want to ask yourself that question or say that. It is a question. It isn't, it'll come back. It's, it'll come back. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.